with Robinhood and its advisors, they're all grappling with what to do in terms of the IPO moving forward. The company has several class action lawsuits, congressional hearings, hordes of customers who are fed up by the recent trading restrictions. But Robinhood also has record app downloads and a need for capital to meet those regulatory requirements amid volatility in certain pockets of the market. And that, of course, is despite having raised more than $3 billion in just the last few days. So that, of course, brings us to the IPO. I've been told it's been deprioritized as Robinhood really fights fires on a multitude of fronts. The company wasn't really close to debuting anyway. Its filing hadn't been made public. No official IPO date had been set. This recent crisis, though, and this recent turn of events could affect a few things. Number one, valuation. Reports suggested that Robinhood was targeting about $20 billion for a price tag in the deal. That figure could move up and down depending on how recent events unfold. Number two, method. Does Robinhood still pursue a traditional IPO method to go public, or does it do something like, say, a SPAC merger? And number three, timing. When is the right time for a debut, guys?
Leslie, is there any thought that perhaps the regulatory environment might ding its valuation or perhaps delay the IPO even further if there are questions surrounding the payment for order flow model, which is basically its business model, then it's got a big problem.
Yeah, so one thing I'm trying to figure out is what this most recent equity infusion, what that has meant for their valuation. Has it helped it go higher? Has it gone down? Because on one hand, you could say that there are all of these downloads that have taken place as people really draw more attention to Robinhood. But as you mentioned, the company doesn't make money based on the amount of people who are downloading their app. They make money by selling their order flow. And so if there is more regulation that would affect their business model, would affect their way of making money, essentially, then that absolutely, based on what we know at this point in time, that could affect valuation if it impacts their future cash flows.
Shepard Smith here. Thanks for watching CNBC on YouTube.